Welcome to the Informed Minority, where we break down the trades using ICT concepts. Today, we're going to be breaking down the trades I took this week. If you're ready to level up your trading game, you're in the right place. Let's dive in. The first trade we're going to be talking about is the one I took on Tuesday, January 14th, 2025, the MNQ long and a short. This trade was actually taken on the 5-second chart. This is the second trade that I took, was a short. As I always do, I start off with noting the week and what days I like to trade and what days I avoid. These were days that I was looking for. Monday was a no-go because it's before PPI, so I'm not interested in that day. I'm expecting it to be high resistance. Tuesday was a good day because we had core PPI. Wednesday was a good day because we had CPI. I actually avoided Thursday as well, and I will avoid Friday because we had a large range day on Wednesday, so I expect high resistance price action on Thursday, even though we have news. So you see here, I put these two different colors as these are the days I'm mostly focused on. This is another day where it could be a potential, and this is another potential day. Orange would be medium, and this would be very low for me. As we always do, we start in the higher time frame and flush out what we're doing and what we're looking for. Earlier in the day, I saw that we had this daily fair value gap wick as well, and I saw that we were maintaining this originally. We did have price action come up here. I was looking to see if we could actually reach up a little bit higher. We had SMT here on a higher time frame, and I was honestly looking for this as a potential downside. That's how I started the day. I was looking for downside objectives because I was aware of where we were inside a higher time frame. If we were looking for bearish price action, which is what we were getting, I would expect for price to be held and maintained in the lower portion of this gap. As always, you like to have a framework or a narrative with our trades. The first one, I saw this reaction here, and that's the first presented fair value gap from this day. And the reaction from there, I wish to see if we would attack these equal highs. And the framework on the second one was that we traded below through, come back up to it and trade down, which is what we got. It just didn't reach fully to this low, which we were expecting as well. We also had the new day opening gap from January 14th. Again, same signatures, bounce off of that. Same thing for the upside. Then we traded below, same thing for the downside. So we had these two levels that caused the framework for us to put on a trade. This was the higher time frame SMT that we had. This works better for the second trade that I took where I was looking for shorts. But the first one, we were maintaining this upper portion, as we'll see later on in the video. That's what helps me frame out the narrative for the day is, do I see SMT and am I seeing signatures that are supportive of a direction that I would like to see? So this is the first presented fair value gap that formed on Tuesday, January 14th at 9:33. As you see, it formed there. So the first trade, you'll see it pretty much was a response off of this. And then the second trade was once I saw that I was looking for this to take out this low. And we didn't quite get that. We came back up and then came lower. And then guess what? That happens in trades. So on Tuesday, since I was taking on a 5-second chart, I couldn't get rid of this candle. This was a 15-minute fair value gap that we inversed. I was explaining how we had been maintaining this for a while. We came down here again. And so we had SMT here, which this would be a low resistant liquidity run signature if we were looking for it. But again, how I started the videos, I was actually looking for shorts because of the expectation that I had of maintaining the lower portion. I just thought that we could actually come up here first. If that happens, I'm not upset about it. It could have been handled better, but that was just reality of what happened on this trade, and there's nothing wrong with that. This is the 5-minute chart. Again, we're maintaining the upper portion of this, so that's what I would have liked to see. Again, maintaining. I thought we would run down here and then expand away, and we just ended up going a little bit lower, which is fine. I'm just out here trying to follow my process, which is looking from the higher time frame down and seeing what we're respecting and what we're disrespecting. I'm not out here trying to be perfect because that does not exist. So here is the 1-minute chart. Notice how we were maintaining the upper portion of the 5-minute fair value gap. This is the 15-minute inverse fair value gap. When we came up here and came back down, I was seeing this response. I went down to a 5-second chart and was looking to find a breaker fair value gap set up here to take us up to this high, and I would have been done before it even got there. But it would have been better to wait until this candle gets traded above, because then that would validate this propulsion block. This is the same thing for the other trade. Now that we had traded below and closed below this 15-minute inverse fair value gap, so it would be reclaimed, I would now be looking for it to trade up and take out this low. That was the next thing I was looking for after realizing that this had been disrespected, and it should respect it again. So here, SMT was confirmed, and so we closed below here. Trading back up into it, I would expect the lower portion to hold price. This is what it looked like on the 1-minute chart. So we disrespected the first presented, I should say, fair value gap that formed at 9:33. So I saw this breaker, and this was at the lower portion. So that's why I took this trade. The entry was there. We fell 2 handles short of that. I always target 50 handles. I target 50 handles because that's the model that I'm trading right now, and that's how I've been able to gain consistency in what I am looking for. This setup looks a lot more like the other setups that I take versus the first one. It looks visually the same in terms of a breaker for value gap, but it doesn't have the same qualities or principles. I understand that. For me, that was a mistake, but it's okay. Everybody makes mistakes, and that's something that I'm going to learn from and move forward with. Here are the macros from that day. We had the 950 macro, which is where I was looking to enter in and for us to take out that low, and it just pulled it around. But again, notice how I like trading, and I believe that trading around macro times is where you're going to get the most high probability, we'll say, setups or framework, because the macro is designed to move around those times. This was something that I didn't notice later on in the session. Was I know that we hit the consequent encroachment of the opening range gap, but I did not know that we had completed it. I don't really think that would have changed any of the things that I was looking for. I still would have been looking for it to take out the PPI lows. I expected it to trade lower just like it did later on in the day. What was also cool, which I didn't notice then, was how we had used the consequent encroachment of this gap and then had trade lower. So that added more for me. If I had seen this, that it would definitely trade down here, but close in the, or take out the CPI low, which we just didn't end up getting. And that's fine. So again, I just like to end it. These were the 2 trades that I took. So notice how it does look the same for value gap. I bought this, I believe, a little bit higher. I personally would have liked to trade it down here, not because of that I got stopped out, just more of what I'm seeing here. There's multiple fair value gaps. I go to a higher time frame, and this is definitely not the gap. It's this one with this breaker. So I would have been entered here, but I would have gotten stopped out. So nothing wrong with that. This is that similar trade, and this one is the second one. Now I want to go over how I do with all my trades. What could I have done better, and what did I do well? What do I need to improve on? So on the first trade would be to wait for the M1 order block to be validated, because that would have gave me more confidence and more support and more stacking in the direction. And as you see, if I would have waited for it to trade above and close, there would not have been an entry for me because it didn't do that. There was nothing validating that trade. As you see in this picture, there was nothing there for me. And I also was buying into a higher time frame, 1 minute for value gap. Looking at the higher time frame versus looking at the lower time frame, that's something I would improve on the first trade. I did go through my process. It wasn't just any trade or any random thing. This does look very similar to a lot of the other trades I take. It's a breaker for value gap, so it's not something that doesn't look familiar. Now, if you look on this chart, it does look a little bit like, what are you doing? On this chart, it does look like the rest of the trades. For the second trade would be to notice that we had completely closed in the opening range gap and kind of bounced off of that. Now, I don't think it would have changed anything for me, but just to understand that's actually what happened. I would have, again, not expected this, but that's just something I've been more aware of. I went through the process of how I pick my trades from the higher time frame down to the lower time frame. This one, to me, feels like a lot better trade, even though I got stopped out. The higher time frame, where is it forming in the lower portion? Everything is stacking in the lower portion. That, to me, is a great setup compared to this one. I was patient for this setup. I moved my stop to an area where I believed it should not trade back up to before taking out the low. It turned around after hitting the opening range gap, complete closure, and then end up trading higher, and that's fine. There's nothing I can do about that. Now we're going to talk about the trade I took Wednesday, January 15th, 2025, the MNQ long. So this is the trade I took on Wednesday. I always like to break down what we're looking for on the higher time frame. So what I was really keying and focusing on was this 1 hour fair value gap here, and see how we closed above it here and we inversed it. So I was looking at this as an inverse fair value gap. And then the draw for me was this high. It's labeled here as a breakaway gap because we did not touch it. So that was another level we were looking for. Notice how we also hit the level that I was looking for the previous day. We reacted off of it. The bodies, again, this is the wick. This is the same level as the wick. The bodies with this 1 hour fair value gap are respecting it. Also, we see here SMT. I'm looking for that in my trades to let me know I am trading in the right direction. Also, that's not noted here, which I just saw right now, is how we have SMT from here to there and SMT from there to there. So again, showing more that it's going to be going higher. So again, a framework, a narrative. This 1 hour fair value gap was encapsulated in here. This was slightly below the 1 hour inverse fair value gap, which we were expecting for price to show a willingness to not go lower and to be held in the upper portion. But also notice how the bodies here are being respected in the upper portion. Remember, we have a wick trade down here, but the wicks do the damage. The bodies are telling the story. And then we have this new day opening gap from January 9th. This is where a target was, and you can see how we have layer portions up there as well. This is the hourly inverse fair value gap, which we're looking at. We would expect the upper portion to support price and going higher. As you see, it comes down here, but it doesn't go any farther down here. Notice how it doesn't even hit that. We're expecting this to support price to go higher. So now we're gonna go to the 15-minute chart. This is the 15-minute fair value gap that happened at CPI. Notice how we scream up. Notice how we cannot even get down to 50%. Again, all of the trades that I'm looking for have this specific signature. The upper portion needs to be supporting price. I don't want to see it go down here at all. That is not to me of a high probability trade. It's not trading all the way down here. I don't even want to see it down there. But if it does come down there, again, I'm looking at the bodies. Notice how the bodies are closing in the upper portion, and even at the top, they're not even closing near the bottom. Amazing signature. 5-minute chart. Again, the bodies are staying in the upper portion. This is a 15-minute fair value gap. The bodies can't even close below this either. So what is that telling me? It wants to go higher. Where's a clean level? This buy side liquidity we have here, very clean. And this was the other one I was looking at, but that's very clean, very obvious level where it could trade to. So we have the breakaway gap. We have a volume imbalance here, and here's a breaker, and then a 5-minute order block, and then we trade above, right? Everything is being supported in the upper portion of these PD arrays. That's exactly what I want to see. And so here's the 1-minute chart. Again, right? Here's the breaker block. Here's the 1-minute fair value gap, key signature. I had actually noted this fair value gap out. Why did I note this fair value gap out? Because on the hourly time frame, we had this 1 hour inverse fair value gap, and what's inside of it? This fair value gap is inside of it. I would have liked it better if it was in the upper portion, but again, we don't really have anything down here. I would consider this very balanced. That's why I believe it stopped there. But also remember, we had the new day opening gap from January 3rd there as well. So again, price can color outside the lines, but we want to see the bodies respect the areas we're looking for. So that's why I chose this one and wanted to see a reaction from that. We color outside the lines, that's fine, but then we expand it away, which is exactly what I want to be seeing if we're seeing bullishness. Notice how we, again, can't even trade down to the consequent encroachment of this gap. Then we create this fair value gap. Here's a breaker block. Again, where upper portion of a 15-minute fair value gap on the top end of a 1 hour inverse fair value gap. I take the trade there immediately. We had this wick here as well. And so we expand the weight. Notice how it pretty much hits there and it leaves, comes up, comes back down, and eventually takes out the buy side liquidity that we were looking for. I was out before I even believed that this high was taken, maybe there, because I'm looking for, again, 50 handles. That's where I have found consistency. I'd like to flush this out as well, as we had this first presented fair value gap from Friday, December 20th that formed at 938. Look at the bodies here being respected. But also we had the first presented fair value gap that was formed here, and notice how we ran through it. I was not looking at this for a short because of everything that I just explained to you, that price would be going higher. I would expect it to run through this, and I would not expect it to come back down and touch it in order for it to go higher. So 937, I would like a little bit earlier, but it's before 940. So I'm expecting a low resistant liquidity run signature. I would not like to see it trade back down here. We trade higher. I'm not looking at these first presented fair value gaps in terms of a reversal pattern or anything. I'm expecting them to get ran through and go draw up to this buy side liquidity. That's what I would be expecting. Here are the macros. I like trading during macro times because they help you in your trades and give you an understanding that you otherwise wouldn't if you're just trading at random times. So I took the trade a little bit forward too because of what was happening here. I would have been okay if it came back down here and hit that again. I wouldn't have wanted it, but that's okay. Notice the turning points. Notice where they are. Macro times. That's why I'm always trying to position myself in or around the macro times. This is the trade. This is what it actually looked like on my screen. We had the 5-minute order block here that wasn't able to get touched, telling me that it's extremely bullish. I should expect price action to go higher, this high here, and ultimately remember looking up there. Overall, it was a really good trade, just very patient and understanding what I was looking for. How I like to always end my videos, especially with my trades, is understanding what I need to improve on and also what I did well in this trade. So a couple of things that I need to improve on was, again, my heart was beating a little fast when I pressed this entry, but then after that, it slows down. I just need to work on that. What I did well, I stuck to my rules. The other thing I did was I was prepared and took the data or intel that happened yesterday to help me have a plan for today. So understanding the SMT, understanding that we had a inverse fair value gap on an hourly chart and what I would be expecting. Thanks for tuning in to this week's breakdown on the informed minority. If you enjoyed today, don't forget to like, comment, and subscribe if you'd like to follow along my trading journey. Your support means the world, and I'm looking forward to seeing you on the next video. Peace.